folks, Dan Frio here, the Mortgage Update, and today is November 13th, 2019, and if you're following this channel, there's thousands of you that are, so thank you so much. And I probably get 10 calls a day at least, people asking me about mortgages, should they refinance, getting help with purchases. So I'm grateful for you guys reaching out to me for all that help. So thanks again. And again, my name is Dan Frio. I do the Mortgage Update daily. I try to do the YouTube channel daily, but I have a radio show in Chicago that airs every night, weekdays, from 7:30 to 8 p.m. on WYLL radio. And then you can hear me on weekends on WIND radio in Chicago from 7 to 8 a.m. And I'm a mortgage consultant and have been for over 30 years. So if I can be of any help, please reach out to me. I'll give you the information at the end. But on the video, if you like it, hopefully you like it, give me a thumbs up. Please comment below because I answer all the questions. You can go back through all my YouTube channels, check my channel, and check the comments, and I answer every comment that's posted. So let's get on to it today. What we discuss on this channel is what's happening with mortgage rates. We don't really follow the stock market and things like that, but I kind of caption that briefly just to kind of get a trend of what's happening in the markets, bond markets and stock markets, because there is correlation there. So what happened today is up 9. That's good. So what we follow here is the mortgage-backed securities market, MBS market, and this number here dictates what happened to the price of the bond on that particular day, on this day. So as the price of the bond goes up, mortgage rates go down. So I expanded this out today because usually I just go over the last, quarter or last couple months. That's what's going on, but this is what's happening so far for the past year. So you go down here, it's 1 year. When this trend is going up, that's the price of the bonds. As prices move up, yields come down. Look at where we are, here to here. That's a huge move. And that's why we're trying to reach out to everybody we can, saying, guys, if you took out your loan in the last couple years, rates are a little higher than they were, at this point here. This was the lowest in a long time, or in the past year, and we're right here, a far cry from down here. So again, as this moves up, that's the price of the bond. Rates go down. Let's just do this for just kicks. 2 years. We're still much lower than 2 years ago. So if you refinanced in the last 2 years, look at doing it again, especially if it doesn't cost you much at all to do that. If you can recoup your fees in a month or 2 or 3, why not do it? If it doesn't cost you anything to do, trade in your high percent rate for a lower percent rate. Save all that money over time, even if it's $100, $200 a month. Just think of it over a 15, 20-year term. There's a lot of money to be saved. So what happens? So we tried to discuss today what's actually happening in the market. Well, the stock market went up today pretty good, 90 points. The federal chairman, you'll hear me reference Chairman Powell. He heads the Federal Reserve, and he made a speech today basically saying the Federal Reserve is comfortable where they are right now with rates. So that means it really doesn't look like they're going to do too much on lowering rates unless the economy kind of starts ticking in a kind of spiraling down. One of the big things that they monitor is manufacturing, what's going on there, wages, what's going on there, and inflation, which is picked up by the Consumer Price Index and the Producer Price Index and the PCE. Those are different reports that come out. Well, the Consumer Price Index, which measures inflation, was up 1.8 year over year. That's good. That's not bad at all. The benchmark for the Fed, what they're looking for is a PCE report of 2 or less. And that came out last week, and we're fine there. So there's no issues to be concerned of with there. Let's go through what else. Mortgage applications are way up right now because so many people are taking advantage of these rates. It's nuts. And if you're not, at least check in. Go to my website. It's the Frio Group. Let's go. I'll show it to you. It's the Frio Team. Right there, thefrioteam.com. And this is where it's going to take you to. Just go there and just, put in your information. I'll personally get back with you and tell you what we can or can't do. What are you going to do? You might waste 5 minutes of your time on this, answering these questions, and it won't even take 5 minutes of your time. Or, a conversation with me. At least you can pick my brain about a few things, and I can give you the direction. Or, how much money is it going to save you? And if it saves you a lot, maybe think of doing something. If it's not saving you anything, hey, at least you tried. So that's my website, thefrioteam.com, and check that out. So, mortgage news. Mortgage rates continue to recover. I basically think we're going to be stagnant here for a little bit. The good news that came out today for us in the mortgage business and for homeowners and buyers is that here, let's go down through here, and it just came across here a second ago. The Fed's happy. Treasury's yields are starting to come down, which is in a roundabout way causing mortgage rates to come down. The biggest thing that came out today was the deal with China. Here it is right here. I knew it was going to be in the headlines. China trade concerns dampen, meaning everything is hinging around the U.S. trade deal with China right now. If the deal gets settled and they figure out something, which I don't think they're going to do for a while because there's a lot of disparities there, but every once in a while you'll see the market really kick. You'll see the stock market jump up and mortgage rates kind of take a tumble. Spike. Let me go back. When the Chinese tariff deal goes through at some point, you're going to see the stock market rally and mortgage rates also go up. So, but I don't think that that's coming in the near future. There's a lot of separation there. So that's when in all the headlines you'll see the Chinese trade deal. That's a big thing. And let me just recap something. With uncertainty in the world, and you have uncertainty with impeachment, the Chinese trade deals, the Middle East, Syria, Ukraine, all this stuff makes the world uncertain. So, normally what happens in a common or a normal market, when there's uncertainty in the world, a lot of people are reluctant to invest in stocks because stocks will take a hit if the economy starts to decline, if there's trade wars, anything of that sort. Money pulls out of the stock market into the bond market. And the bond market consists basically where people trade and invest are mortgage-backed securities and treasuries. Okay? So as money flows out of stocks, it goes into here, pushing up the price and the yields down. Okay? So when you hear news about the China deals going through, which we had right in this area here, they thought there was a trade deal going on. Stock market went way up, pushed money out of here, which pushed the prices down and yields up. Again, as this goes down, this is the price. As prices go down, yields go up. You'll see we're kind of stagnant during this time frame. But again, if you look at a longer term outlook, where we've been for the past year, rates are a ton better than where they were. And again, in a 2-year time frame, so if you refinance down in here, let's say you refinanced last year at this time, rates are that much better. That might be 0.5% in interest rates. You got a $300,000 mortgage, you might save a couple $100 a month. So maybe look into doing something. So that's today's caption. Again, the market was up 9. But check out my website. This is under construction. I'm adding a lot of things to this. Probably within the next 2 to 3 months, you'll be able to put in your application, pull your credit, pick your rate, pick your program. I'll guide you through all that. But you'll be able to do that live right here on the website. So you can also scroll down, apply here. Let me go over another website that I created about 2-3 years ago. It's creditscoresandmore.com. creditscoresandmore.com, plural, right here. And what this website will do for you is you can go down here and get a free credit score, free credit monitoring right there. This step 2 will take you through and actually get you the credit reports from TransUnion, Equifax, and Experian with all of your credit scores on there. And I have another video kind of explaining that. You have over 30 different credit scores. So if you really want to know what your credit scores are that lenders use, this is where you go. And if you're having any credit issues, collections, judgments, you just want some stuff cleared up, this system right here, I just set this up probably 2-3 months ago, and it is kicking it right now. It does credit monitoring, identity theft monitoring, credit repair, credit counseling. There's attorneys right here. It's a monthly fee of $89. That's cheaper than you're going to get on a credit repair system, period. But you get credit repair, credit monitoring, identity theft monitoring, an attorney there for your help in case you hit some snags. You can also do your wills and trusts and everything right in that. It's $89 a month. I use it. I have another video that I actually walk people through my account with this company, and it's phenomenal. So back to it again. The market was okay today. Actually, 9 really didn't do too much for us, but it's at least it's a good direction. So thanks again for watching. God bless. Have a great night. Please give me a thumbs up. Share the video. Take care.